Y'all are going to be getting an introduction to it tonight. The style is called meat and potatoes. The basis of this trading style is learning how to, this is no indicators, this is just strictly price action. Being able to read the chart on any time frame, being able to identify what the actual trend is at the time, and then a set of rules to follow to trade within the trend and using the trend in your favor to move through to different zones and different areas, and being able with precision to pick areas. You can be able to, what I'm teaching y'all to be able to do is be able to find an area above or below wherever price is at, set a trade, have a trade sitting there waiting. You don't even have to be around to take that orders. There's also levels to add on to it with breakouts and a bunch of other stuff, but we're going to get started simply with what we call meat and potatoes. Let me see here. Okay, if everybody could screenshot this, take a picture of it. This is going to be an interactive session because there's rules to this trading style that you follow every time. We have here on the left side, we call this the left side, where you see trend, ignore wicks, all this stuff. This is the left side. And then over here, we have the right side, pretty straightforward. But we start here on the left side, and I'm going to go through this and give a couple of examples. And then I'm going to be asking y'all some questions to chime in because I want to make sure everybody understands this. Because once you understand this, I'm telling y'all, this is so powerful. I want to bring up actually one other thing real quick, just to give y'all an example. This is some old stuff. I was just going through old trades. And like this trade right here, this is a 10 pip risk for 50 real quick. So this is being able to like identify this area right here with this box, why I timed for this box exactly for price to come in here. And this thing right here, we're going to learn later on. I'm just going to give you a little bit of nuggets real quick before we get started, or little pieces to understand what we're looking for. But being able to identify why this is, we love these right here. This is called a wall or a racetrack. Price loves to come grab these levels and climb all the way up these walls with no opposition. It's almost like free money. We'll show you just one more just to kind of give you guys a little more of an idea. Here's another one I loved. This was 3 pips. This was a 3 pip risk. Let me see if you guys can you guys see the new screen yet? Okay, so again, same thing here, little three pip zone. I mean, you can trade whatever you want to. There's a 3 pip risk. You can see in this trade, I'm up $501 on this, on a 3 pip risk, up 50 pips. I mean, I've got these, I can show you guys hundreds of pips on a 10 pip, 5 pip zone going for 200-300 pips. So it's really, really powerful information. But yeah, let's get back to, we'll get back to meat and potatoes. Okay. So step 1, this literally, when we go through and go into the markets, we're going to pull up a chart every time. And you're going to, in a short amount of time, once we go over this a lot, or maybe in a couple of sessions, like these rules would already be ingrained in your head. You won't even need to look at the list. And you'll basically be able to scan through all the currency pairs and be able to identify using these zones what has good setups and what doesn't. And be able to take trades and make money all day long. We'll start with step 1 is, first off, okay, this says red and blue. This was created back when we were trading on FXCM, and FXCM, the candles were red and blue instead of green and blue, or I'm not, whatever platform you're on, I'm not quite certain what colors you are, but blue is going to be a green or an up candle, red's going to be a down candle. In reference to this trading style, the colors of candles is everything. When we're going to go here on this chart right here. So right here, you guys see how we have 1, 2, 3, 4 red candles. Yes. Everybody see that? Okay, cool. See here, you got 1 green candle. Yeah. Then we got 1 red candle. Then we have 1, 2, 3, 4, 5 green candles. Whenever candles are in sequential color order, it counts as 1 candle. Reason being, this is on a daily chart right now. We have 1, 2, 3, 4. These are 4 daily candles. If you go to a week, it's probably going to be 1 red weekly candle. So if it's the same color scheme, it's always going to count as 1 candle. Same thing here. Like if you go on a, let's see, it's a 4-hour chart. Let's see here. We have 1, 2, 3, 4, 5 red candles. If we go to a daily, that's going to be 1 solid red candle. So that's why they correlate always, just the time frame makes it differently. So it's very important just to always pay, if there's no break in color, as long as it's the same colors back to back, you count that as one candle in reference to following these rules here. So step one, we have action candles. The action candle is going to be the first color scheme. So meaning when you come to current time, whatever chart you're pulling up on, whatever time frame, it's irrelevant, whatever chart you're looking at, the first color group of candles that you see that's same as the current live trading candle, that's going to be your first color candle. We call that the action. That's for the action, that's what's live. So if you have a one live red candle going down and then two other red candles above it, the action color is red. So we'll pull that up here just to... Okay, so here on the daily chart right here, anybody turn your mic off or type it in, what would the action color be? Anybody know?
Red.
Red. The action color is red. There's 1, 2, 3, 4 red action candles. The next step is going to be identifying what the anchor candle is. If you look at that list, you see anchor candle mark the high and the low. So what's the color? The color to the left of the red is green. So we're going to take this green candle here. We're going to mark the high and the low. We're going to mark the high and the low of this green anchor candle, okay? Once you've done that, you're going to go to step 3. Step 3 is figuring out if your anchor candle is engulfed. So what you do, you go to the left to the next color candle. Whatever candle is, if it's green, you're going to be looking for the red. So we go here to the left, we see this big red candle, yeah? You have to ask yourself, is this anchor candle engulfed? In this instance, yes, this anchor candle, is a red candle bigger than the green candle? Yes, it is, right? So we call that's what we call sideways. For right now, at the beginning level, we ignore that. We go on to the next. We go to the next chart. So trying to make this box smaller so I can get to the charts. There we go. Okay, so we'll go here on this chart. Okay, so another chart pulled up. What is the action candle here on this chart?
Green.
Green.
Green, perfect, green. So okay, we have green here. That's step 1. We go to step 2 to see what the anchor candle is. It is what color? Red. How many red candles are in the anchor right now?
2.
2. There's two red anchor candles. So we're going to go ahead and mark the high and low of our anchor candle. So now we have step 2, anchor candle marked high and low. We now have to look to the left to see if it's engulfed. Step 3. Step 3, is this green candle the color to the left of our red anchor candle? Is it engulfing? Is it bigger than our red anchor? No, so it's not engulfed. So that's good. So we can then go to step 4. When we go to step 4, we now take the high of our anchor candle and the low of our anchor candle. We go to the left. We're trying to figure out who's in control. So we got to go till we hit what we call a wall. That's going to be the body of a candle, not the top of a candle, the body of a candle up above and down below. Up here, we go to the left, we hit this wall here, right? Everyone sees that, we hit this wall here. We go to the lower side of the anchor, we go to the left, go to the left, go to the left. It's all the way back here till we hit something we don't know. So what we're doing with this step is identifying who is actually in control. You see step 4, high and low control candle. We're trying to figure out right now for trend, who is in control right now, the buyers or the sellers. Whatever side hits first, that's who's going to be in control. So on this instance, From this candle, we go to the left, we hit this wall. The sellers are in control because it's hitting a candle up above first. So now if it's hitting on the high side, it's a possible downtrend. You see on step 4, lows, uptrend, highs, downtrend. If the high side's hitting, you have a downtrend. If the low side's hitting, you have an uptrend. Now you get to go to step 5. So that's figuring out if you have a setup or not. Setup means once we've identified these steps and all these rules we have what we're looking for, we can then go to the right side of the charts to break this information down further to look for zones inside of our anchor trading within trend. So step 5, we have a downtrend. So we need to ask ourselves, what is the action candle? What color is the color of the action? The action is step 1, the first color of candles we identified that we ignored until this step. Now we go back to those candles and we ask ourselves, what color is that? On the sheet it says blue, but blue is green, so it's the same thing. So in this instance, for a downtrend, we need to have blue or green action candles. What color do we have? We have green, correct? Everybody see that? So one last step. After we've done all of this, so now what we have right here, we call this is a downtrend. We have everything we're looking for with the colors. We then go to step 6 to see if we have what is called a level break. If it's a downtrend, it cannot break the higher high or the highs. Meaning if it's a downtrend, we have a green action candle. We're not engulfed. It's not sideways. The highs are in control, so the sellers are in control. It's a downtrend, but we have to make sure our action candle, these 7 or 8 green candles, are not breaking the high of this anchor. And it can touch, but if we have a close above it, it is what we call, it's breaking the anchor. We call that an anchor break. If you have an anchor break, you skip it and you move on. You go to the next chart. Later on, there's a whole nother style and strategy for we can use this for a breakout to get this piece of it. But for right now, this is just identifying trend. And right now we have an anchor break. So yes, we did all that work, but in time when you guys get this down, I can look at this and do this in less than all the steps I can do in less than a second, just looking at a chart. And you guys will be able to do that too. So we will go on to, here, we'll give a different time frame. Okay, so here's this on a 60-minute chart. We have the same pair, but it's going to be a different picture. So right here on this chart, we go again to step 1. Step 1, what is our action color? Red. Everybody sees red, I'm sure. We have red here. We have 2 red candles. That is our action. That's what current price is doing right now. So we then go to the color, step 2, we go to the left to identify what our anchor is. Our anchor is green. We have 1, 2, 3, 4 green candles. We mark the high and the low of our green anchor. We then go to step 3 to see is it sideways. We have these 4 green candles here. We look to the left for our red color. We have 1 red candle. Is our red candle bigger than the green candles? Is it engulfing them? No. It's smaller than these green candles, so we're good. We can go to step 4. Who's in control? The highs or the low? We take the low side. We go over to the left till we hit a wall, a body of a candle. Hits a body here. Then you take the low side till you go across till you hit a wall. It hits a wall. Everyone see how it hits this wall here? There's still a little bit of green down below. Let me go ahead and mark that. So here on this example, we have a high side. We go all the way across till we hit a wall. And actually the rule is once you hit a wall, you go up again to the top of that body and you look for a color change, meaning where it went from green to red. Same thing on the low side. You go across till you hit the wall and then you look down till you get the color change. And we have red, green. So in relevance to time, not price, time, what one of these happened more recently? Which one happened soon, or what one happened most current to what current price is, time-wise? The low side or the high side?
The low.
The low? Very good. The low side. Absolutely. Perfect. So if the lows hit first, we then have what kind of a trend? Whoever just talked. Uptrend. There we go. Uptrend. So we have an uptrend. In order to have an uptrend, what color does our action need to be?
Green.
Green. For an uptrend? Step 5, seeing if we have a setup. If we have an uptrend, we then look back to our action candle. If you see on step 5 on the list, on the sheet, for an uptrend, we need to have red action candles. Because it's an uptrend, we're wanting price. We want our red action to be coming down to play within, I'll show you on here. This is our red action. We want our we want it red because we want it to come down looking for a zone somewhere inside of this green anchor. So we need to have red action candle for it to be an uptrend in order for us to go to step 6. So step 6, we then, for an uptrend, the action cannot break the low of the anchor. Is it breaking the low of the anchor?
No.
No? Perfect. So at this point, now we have what we call an uptrend with a setup. And just for example purposes, we're gonna go over this side more, just to kind of show you why we're doing this and what this all means. You see the right side of the chart. This is now, once we have this going, this is where we would go to the right side of the chart. And that's zone right there. So what we're looking for on this side, and we're just going to go over this briefly, but just to show you guys why we're doing this and what we're looking for. Basically, we're looking for what we call a zone. What I see right now, I see this zone right here, and you see how price came in perfectly and touched this and is now moving its way out. It came in, I mean, it's only 4 pips up, but what on this, what we're looking for is, you can see here on zone levels on the right side, respecting wicks and move. First step is move in, move out. I'm going to go over this very quickly, but we'll get to this later, and I'll show you what all this stuff means, and you'll be able to understand it perfectly. But we're looking for a move in right here. Right here, we have what we call a rally, a basing, and a rally. It's a strong move in. You guys see this really big, strong green candle. Then we have this basing here. We call this a boring candle. Although there's these huge wicks, it's a boring candle because of the wicks and the small body. And then you have a decently strong move out. So we have a rally, it bases out, and it rallies. We have this area right here. It's what we call white space. It's these wicks. These wicks are really important. When I take this down to a smaller time frame, we'll go to a 5-minute chart real quick. I just want to give you guys an example here so you understand what it is. On this 5-minute chart, you see how these patterns change? On this here, we have this wick right here, white space. This is really what it ended up actually grabbing for the most part. And in this area here, you'll find that these areas, as you break it down in time to smaller time frames, that you'll get these patterns. We're always looking for these rallies, these perfect on the 1 minute. So you see here, for move in, move out, we have this big green candle. That's a strong candle. Then we have, you see step 2 on that, boring candles. See this here, these big wicks, these small bodies, those are boring candles, meaning there was a good amount of price movement, but the overall body is staying in a consistent place. And although it's up and down, it's a consistent candle. It's not very exciting. You can see here, you can see the difference in this candle, how big that green body is. That's from the open and close. It opened at one area and made a big close up above. That's showing that there's force and there's momentum in that candle that's driving it up. So on this one, we have a strong move in. You see step 1, move in, move out, strength, strong move in. Then you have boring candles. That's these small bodied with larger wicks on their candles. Those are boring candles. And you see this move out of it, this big green powerful candle moving out. That's not textbook, but it's close to textbook for exactly what we're looking for. Big move in, boring basing candles, big move out. And then you'll see how price came, it dipped right in right there, just barely dipped in, that little wick right there. That's all we need to grab that order. This is a basically 4-pip zone. It's already been, since it touched over here earlier, if we would have saw this earlier, a little bit earlier. Oh, it's on a minute chart. It's up 13 pips. Oh, it just took off on this 1 minute. Okay, there we go. That's what just happened. This 1 minute candle just went 13 pips. So here's a little 4-pip zone. We just identified, you guys saw we did this on the left side. We went through the left side rules, identifying a trade. This candle is now green, but it was red. At the current time when we were going through this, we had, this is exciting. I love when this happens in real time. We had our red action candle. We ignored it. We looked to the color to the left. We had our green anchor candle, 1, 2, 3, 4 green anchor candles. We then identified the high and the low of the anchor. We went left to step 4 to see who's in control. We went left over here, hit this wall, went up, looked for color change. Boom, right there, color change. We go on the left side till we hit a wall. Go look down for a color change. That was right here. Step 4 says who's in control, highs or lows. The highs are in control because it hit, the lows are in control because it hit the low side first, most recent in relevance to time. And then step 5, we needed to have, for an uptrend, we needed to have a red action candle. We had a red action candle. Step 6 was our action candle breaking the low of our anchor. No, it was not. So then that's why we were able to go to the right side and go down to a smaller time frame. We went to a smaller time frame. We identified the zone here. Look how price came in. So basically going through all those steps, that was an uptrend with the setup. We identified a zone, and then in real time, price came down, touched our level, and then it's now up. It's now up 15 pips, basically, yeah. 14.8 pips. So you go through these steps. You guys saw this in real time. Basically, we identified a zone. We identified a trade. That was a 4-pip zone. We're already up 15. Probably once this goes a little bit higher, once this breaks this little area right here, it's definitely going to go to it should definitely go to the top of this. That's a quick 20 pips for a 4-pip risk. You can load on 4 pips. I'm sorry, I'm not. You have your own rules for what you're willing to risk on a trade, but this strategy is teaching. The whole thing behind is teaching how to grab a 4-pip zone real quick for 20 pips. That's a 5 to 1. You can risk $50 all day on that. If you have the account size to load up your account on that, you're only risking 4 pips to grab a quick 20. If you went out for 15 right now, as we go through this more and more, you're going to learn. There's this thing called white space on here. You'll see that on the right side too. That's going to be in reference to these wicks here. See how price came up and touched this wick, this last wick right here above all these bodies? It literally came and touched this, and now it's sending it back down. So through time, all of this stuff's going to make sense. I don't know how everyone's doing with this right now. Actually, go ahead. Is this making sense to everybody, or are people kind of confused? Or does everything make sense? How you guys doing out there? Feel free to speak, type, anything.
Good so far.
Good? Okay, cool. So yeah, that's just a real time. This isn't what happened in the past. This is going on right now. And once we drill this, and it'll take a couple times of us doing this if you guys want to learn more. But this is how to do this. And this could be on this could be on the daily, this can be on the 5-minute, 3 hour, 4 hour, whatever time frame you want to do. It's all about learning what the trend is, how to trade with the trend, and be able to identify these. For the most part, whatever time frame I'm on, even if I'm on a 4 hour or daily chart or whatever, the highest I really ever go is about 25 pips. I try to keep everything less than 15 pips on my risk, and I have all day long 5, 7, 10 pip trades go for hundreds, 50, 70, 100. 4 to 1's usually my minimum, but I'm a big fan of 10 to 1s and 20 to 1s and all sorts of risk to reward ratios like that. So again, there's one real world example right there. We will go on to another chart now. So let's see.
Michael, there's 2 questions in the chat. One is, can you draw the yellow rectangles again? And the other is this recorded?
Okay. Edwin, I believe, is recording this. so that we have that. And if not, like I said, if you guys like this, I'm willing to do this with everyone more and more as we move forward. But you were asking me to draw the box on this particular example again? That was a question, or that was a comment?
I
Yes?
believe so, or how you draw them.
Okay. How you draw them? Okay. Let's go to, here we'll go to, let's see. Oh yeah, it's in the 4 hour. What pair are we just on?
Okay, the clarification was where you draw them and why.
Okay, where you draw them and why. Okay. What pair were we just on? Okay, I don't know what I did. Somehow I X'd that out of here, so we'll just go on to another one. All right, so this is a trade that I'm actually in right now. I'm up I think I'm up about 50 pips on it right now. I've been in this one since Thursday. I actually took it Thursday. I was laying in bed, saw it on my phone about 1:30 in the morning, just right before I went to bed, saw a quick setup, and I took it. And I've been in it since. My target on it's about 175 pips. At the time, it's going to be kind of hard to see, so I'm just going to, at the time, this is what I saw. I had a red action candle, green anchor, wasn't engulfed, lows were in control, or it was high. It was up on the daily, then on the 4 hour, there we go. 4 hour, it was red action, green anchor, not engulfed, lows in control. I'm just doing this real quick so we can go over the box for as to why. So that was basically my playing field was right here. But I want to go down to a smaller time frame to see what it looks like on the smaller time frame to be able to identify a trade. So we'll go to the right side here for zone for how we select a level. First thing we're looking for is move in and move out. The move out is more important than the move in. Both are important, but if you have a kind of weak-ish move in and a strong move out, you're still okay. So in this instance, for this area, oh yeah, I guess I should draw that at the time so you guys can see what the anchor was. At the time, this was the anchor. This was the high of the anchor. There's 1, 2, 3, 4 blue candles or green candles. That was the anchor. So that was a high, that was a low. So basically anywhere in here is my playing field where I'm looking to identify a zone. Once okay, actually I should point this out because I didn't mention this earlier. I'm just so used to doing this. You guys can all see that I have 4 charts up. I have 4 charts up. As long as I'm on a computer, I have 4 charts up every time that I'm trading. Reason being, you're trying to have a real perspective of what's happening in the market through a variety of time frames to see how things are correlating from time frames, from a larger time frame down to a smaller time frame. And if you can trade, if you can identify things like on this one, we'll get to this later on the daily, why the bias on it was up. It didn't follow all the rules for uptrend with the setup, but the bias on it was up. So it shows me that the higher the time frame, the more powerful the zone is or the trade is, because a higher time frame always takes precedence because that's where big money is. So we always have multiple time frames up. The rule of thumb kind of is multiples of 6. So like if you're using a 30-minute chart to identify your zone that you're identifying levels on, you're going to be timesing that by 6. So basically like a 3 hour to identify trend and or even all the way up to the daily to identify a trend, because a 3 hour times 4 or 6, I'm sorry, is 18 hours. You don't really have an 18-hour chart, so it's 24. You go to a daily. But and again, we'll go over this stuff more. I'm just kind of, there's a lot of information to this, but once it's all out there, you guys are really going to understand it all. I know I'm kind of jumping around a little bit, but that's just, I'm trying to give you guys just a real quick introduction to this. But so again, back to this 4 hour, identified it on the 4 hour. I have up on the daily overall, but I have up with the setup on the 4 hour. So now I broke it down. I usually have it, if I have a 4 hour up, I have a 60 and a 30-minute chart. So we'll go here to this 60-minute chart where we were again. This black line represents the high of my anchor. This black line represents the low of my anchor on the 4-hour chart, but I have all my tools, so it correlates over onto the smaller time frames too. So in the back of the time too, price was like this. It was going down. I had this green still anchor, and I had red actions going down. So what I was able to identify here, you see that first part of zone and levels. You're looking for the move in, the move out. Here we have this basing here. We have a green candle. We have a move in. You can count that as one candle really because it's green. So you can count all those as green. That is a strong move in because it's 3 green candles, 3 green bodies. And this last one is the strongest one moving in. So that's a strong move in. Then you go to the next step, boring candles. Are there boring candles? Are there these small bodies with big wicks on either side? Yeah, there's boring candle, boring candle. This one's not boring. These two are boring. But you count all that basically as a package, not as one color. But this here, you see I have the green move in. I have boring candles, 1, 2, 3, 4, 5 candles basically, and then move out. See this big, strong price opened here, went down a little bit, and then shot all the way up. And then at the end of that 60 minutes, it closed right here. That's a pretty explosive candle. That's a strong move out. We have a pretty good move in. We have basing and then the move out. You'll see here where it says freshness. Freshness, what freshness means is at this time, when we identified this area here, again, I'm just showing you all again so you don't get confused by that, but I know these numbers are kind of getting away, so I'm going to go left again. But at this time, when this looked like this, had price been back, when I drew this blue or this yellow box, had price come back into this box? From when this had happened, had price come back into this box yet? The answer is no, it has not come into it. So we call that fresh because price hasn't come back in. Nothing's touched in here. It's a fresh zone. The next part of that is authenticity. Is it an authentic zone? What does that mean? You have to now take this pattern here that we've identified and go to the left and try to see if you hit a wall. If you hit a wall, that means that it is authentic because price at one point before this had happened, price over here to the left, price was up here. So there were orders sitting here down below. People were trying, every time there's always somebody trying to short it, there's always somebody trying to go long. So when price was up here, as it was moving down, orders were here, it kind of chopped through them, boom, bounced back and forth, went all the way down, boom, 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 boom. And then, so there were buy orders here at one point. Sellers beat the buyers. There was a fight happened here. Sellers beat the buyers, boom, pushed all the way through, pushed all the way down, then came all the way back up. There were sellers sitting here, boom, but price, actually that's irrelevant. We'll go to that later. At this time where it was, price moved through here. It moved through all the buy orders. Sellers moved through all the buy orders, and then price came over here moving up. And as this basing pattern happened, all this stuff is gone at that. This came when there were any sellers sitting here. When this basing pattern happened, all the sellers that were waiting over here, once price had broken through, there were orders sitting here to sell. When this pattern happened, it chewed through all of the sellers sitting there and moved up. Because price can't move up if there's still sellers, there's still people with orders in the market saying, hey, I'm willing to sell at this point. Price cannot move higher until it beats all of the sellers who are here on the left. Everyone that's willing to say, I will sell this at this point, once all those orders are gone, that's what this basing is here. It's the fight back and forth between the people trying to buy it and send it up and the people trying to sell it, send it down. Price based out here, fought all the sellers, and then skyrocketed out of there. So again, that would be authentic because there's no sellers sitting here anymore as of that point because the buyers took control and it moved through. So we're looking for strong move in, basing, boring basing candles, and a strong move out. Is it fresh at the time? Had price been back down to it when I drew this box? No, price had not been down to it. Was it authentic? We got to look to the left. Did it hit a wall? Was price above and price moved through it? Yes, there's a wall. Price was above and it moved down. So it's authentic because this cleared out any orders that were sitting here. As we go through this more and more again, this is I promise y'all, this is all going to make sense. Now what we're looking for is this beautiful, beautiful thing called white space. White space is a wick that's alongside a wall. I'm here on the 60 minutes, so this is kind of a big, I've seen this so much, so this isn't going to be as clear as an example, but it will, like I said, in time, once you've seen this stuff so much, it makes all the sense in the world. Actually, no, okay, we'll show it here on the 4 hour. That'll make sense on the 4 hour. There we go. Okay, so we identified that stuff on the 60 minute, but here on the 4 hour, you see how we have this wick alongside a wall? This one wick alongside a wall body of a candle. I'm always getting, whenever I say a wall, that's a big body of a candle. There's a wick alongside a wall. You see on the list there, it says white space. That is the number one thing that we're looking for. We're not looking for the body, we're looking for white space. Do you see how price came, it kind of danced around, then price right here. See how it came in and just got to this, just the very start. Let me make this even bigger. I guess that's as big as that will go right now. I don't know where the zoom is. Yeah, okay. So you see this white space right here, where that's the number one. Once we've identified all that stuff, that's the stuff that we're looking for. This whole thing is really based on white space. We're looking for wicks alongside a wall. So you can see here, it kind of bounced around here, but until it came and touched, and it barely went in there. It just barely touched the wick, and then price came out of there. And it's been out of there since Thursday. This thing's been up as high as I think like 90 pips or something like that. Yeah, it's been up 100. Well, from that point, it's been up 104 pips from there. Hopefully, I'm answering your question again. This stuff will make more sense as it goes, but once we've identified we have uptrend with the setup or downtrend with the setup, we then go to the right side to look for within our anchor. Again, the anchor is going to be the high and low. That's that black line. Within our anchor, somewhere in there, we're looking for strong move in with a strong move out, boring candles, something that's fresh and authentic, and for white space. And in this instance, again, you see it better on the 4 hour. The white space was right there, and it sure enough, came in right there, boom, grabbed the white space, and is moving out. Does anybody have any questions right now, or is this making sense? Hopefully, kind of.
Where will you put the stop loss on that euro trade?
Oh, on this one, my stop loss on this one, I took a very small position size on this one. So I took a bigger zone than normal. It's going to be below the basing and below the last wick of white space. So in this instance, you can see it's right there. I took it down a little bit further. I think I went even down to a 5 minute to identify that. Pull it up on 5 minute. Yeah. So you see here, I went all the way down to a 5 minute. So I'm trading a daily, I'm trading overall up on the daily. I'm trading a 4 hour up with the setup. And same thing, it was basically up with the setup on the 60 minute, but the 4 hour was my up with the setup that I was going. I went down to a 60 minute to look for a zone. I saw it even better on a 30 minute. And then when I come down here to the 5 minute chart, on the 60, you see right about here is where you could have had your stop, but I went down to the 5 minute. Here on the 5 minute, I like this strong move in, boring candle, basing boring candle with a strong move out. So I saw that there. I wanted to have my stop below that wick, that white space. What white space is, and the more and more we go through this, y'all will understand it. The white space is basically, that's like signifying where there are unfilled orders sitting there. When price was moving up, like in this instance, when price was moving up, strong, going higher, this leaves a clue. When there's a wick like this, that leaves a clue that there's unfilled buy orders sitting here. There's a whole chunk of people waiting for price to come test it, come touch it. It couldn't even this zone was so strong, it couldn't even get deep down into it. It literally got to right to where the white space started and shot it out of there. So I could have had my stop right here. Yeah, that'll work. I could have had my stop right here. We'll go back to the 5 minutes, so you'll see. So that's where it is. That's basically where I pointed out on the 4-hour chart. But I like this. I see this area below. That's just one last little, that basically, this move's been going, but from this point, there was a big move here, and then it came and kind of retested it and then took off. You can see here how this wick is basically touching this wick here. If we go down to a 1 minute chart, there'll probably be white space and more, there'll be white space and more boring candles there. You'll see it even more so on a 1 minute. It'll take a little time to get back there. All right, there we go. Yeah, so I mean, you'll see that here. Right here, you have a big move in, big move out. You have a small amount of white space here. It's harder to see on the 1 minute when you're dealing with the 4 hour, but basically, again, same thing. You see this rally, base, rally, rally, base, rally, rally, base, rally. There's a little bit of white space here. It went a little bit further, but that's just grabbing into this column here. We're all the way down to a 1 minute when we're talking 4 hour. I hope it showed it a little bit better, but I assure you it shows that across the board time and time again. But that's why I put my stop there, because based on, I'm going for I think 175 pips on this, so I took a bigger risk on this one, and I was trading small. So, but that white space is, again, unfilled orders. That's going to be your saving grace. You're looking for those unfilled orders in reference to have a stop. You're always going to have your stop below unfilled orders, because if price keeps moving down, when you're in a trade, you want to have things that are going to pop it and send it back up. While we're talking about white space here too, there's exceptions to just one single wick alongside a wall. White space can get a little bit confusing, so I'm not going to try to get everyone confused right now, but we got to address it. You guys see here how on where it says white space on the sheet I gave you guys, you see two candles with two kind of different length wicks. That's this pattern right here. Smaller wick, a little bit bigger wick. That's kind of like, we call it towers. Because in reference to white space, you have to, sometimes you'll see how they're, okay, even right here, there's two wicks right here, right? Everybody sees that? You have to count though. Whenever you have wicks, the wicks that you're going in reference to, you have to look to the left to see where the wall is. Right here, we have one wick next to a wall, but we have the second wick also next to the wall. There we go. So in order for it to be a fresh, authentic piece of white space, it has to be there has to be an odd count of the portion of wick. I know this might sound a little bit crazy right now, but like I said, once it all makes sense, like you guys will never want to trade another way. So I'm going to break this down for you right now in the portions of the white space. Let's get rid of some of these other lines so we're not getting confused. Okay, so in this instance, we have these two wicks. This would count as an exception. So like I don't need to do this. I don't need to break this down. I see the exception here. There's the twin towers, if you will. I think that's what they used to call it, but towers, whatever you want to call it. You have two wicks next to each other, one's shorter than the other one. So that overall, just seeing that real quick, you know that you're good. But a lot of times you'll come across 4 wicks, 5 wicks, 7 wicks, whatever it is. You need to do this step to understand what has unfilled orders and what's already been filled. So technically, in reference to this particular portion where the red and blue are even, whenever you come across a wick, you take the wick. Actually, we'll start here. This one right here. We have this wick alongside a wall. One single wick next to a wall. That means that there's unfilled orders there. If there were 2 wicks there, because at one point there was a wick. Price moved up, price moved up, price moved up away from there. There was unfilled orders there. Price will come back down and test it and grab all those orders and send it back out. Like in this instance, that's what happened here. Price at this green candle closed, this candle opened, price came all the way down to here, left a wick, came up, closed right here. Then the candle opened, it possibly went down, it possibly went up. It definitely did both. What one happened first, we don't know. But more likely than not, price came down, grabbing all of these unfilled orders, one single wick next to a wall. The second wick came and grabbed all of the unfilled orders that were sitting here in this singular one wick next to a wall. So once this had happened, the price came down and then the candle came all the way up to here, probably did this and then closed right here, opened, probably came down here, left a clue of unfilled orders and then shot all the way out of there. When this portion was happening, this at one point was unfilled orders. The candle opened, probably came down here, closed here, or probably opened, went all the way up, came down, closed, went to the left, opened, came down, cleared all these orders out, but guess what? It went a little bit further and left this one single wick here. Went all the way up, came down, closed, opened here, left this wick here, and then skyrocketed up. So as of right now, when I see this right now, first off, you have the two towers here, so you're good normally, but if you want to be breaking this down and as we move forward, you'll understand why we're doing this. This area, this particular portion has been cleared out. This was authentic. Price came back down here. It grabbed all of these orders. That cleared it out. But it went a little bit further and left this area here. So now this area here is actually one single wick next to a wall. If price did this, came up here and then came down again and left us a third wick and went back up, guess what? This area would now be actually unfilled orders because there was unfilled orders. Price came and took those orders, came out, came back down in here again. There were still unfilled orders and it sent it out. As we go further and further in this and we get to more examples, you guys will understand and see that more clearly. Okay, we'll go with right here. At the particular time, you have these wicks here, right? Let's just say we have all the same, well, this is inside of a zone, so it counts. So here we have 1, 2, 3 wicks, right? You always got to go when you have this wicks, 3 wicks alongside a wall, you count. You mark the bottom of that, this particular area, the bottom of that is right here. So we now have 1, 2, 3 wicks. There's 3 wicks in here. We call established. There's established orders here. Cleared, established. There's established orders. This cleared it out. Then this reestablished it because price was here, came into here, grabbed these orders, price moved back up, did its thing on this candle, came back down into that same area, testing it again, came a little bit further, shot out. This now tells us if there was established orders here, this cleared. If there was just 2, it would clear it out. But when there's 3 there, or 5 there, or 7 there, or 9 there, or 11 there, if there's an odd count of wicks next to the wall like this, 1, 3, 5, 7, 9, 11, 13, 15, 7, it doesn't matter how many there are. If there's an odd count, this still counts as established orders. There are still established buy orders sitting here. We now go to the portion below, these 2 wicks, mark the bottom here. We have 1, 2 wicks that are cleared out because it's a 2 count. If it's an odd number, 2s, 4, 6, 8, 10, 12, that counts as cleared out. There's no longer established orders there because there was. Price came into here, grabbed it. Price never came again. So as far as we know, when we see this, as far as we know, there's no more orders sitting here in this particular point. But you see on this how price, there's still another portion of wick when this initial candle happened. We're breaking down these 3 wicks, but this left side comes all the way from this candle. So we got to go down to this portion of it. We go left till we get to a wall. Boom, really we hit this wall right here. We have this wick down below though. Actually, we'll make this real perfect because it's going to hit that exactly. Take that down just a smidge. It's there at the bottom of this. Here's where we hit our wall over here on the left. We now again have 1, 2 wicks. So that's cleared out because it's an odd count, 2 wicks next to a wall. But then down here, we have this one singular wick left. We have wick alongside a wall. So that's still an established set. That's still an established wick. There's established buyer sitting here. Price came on this candle when it had closed here, came down here, grabbed whatever was here, shot up, and this big candle went way out of there. Big, strong move out of there. So there's still that portion. When price came into here, it left us a clue. A lot of people don't look for these. A lot of traders don't know about white space. This is one of the most powerful things you'll ever see, because when we go through time and time again, I'll show you how there's a little piece of white space above all this noise, all this sideways action, all whatever you want to call it. But then there's going to be a wick above or below next to a wall, a 1, 3, 5, 7, 9, 11 count. And time again, it'll come and grab that little piece of wick and boom, go completely the other way. Actually, you can see it here, actually, now that we say it. We had this last little piece of white space right here. See how we got this big move out of here? Make this a little bit smaller. This was a 53 pip move out of there. See how price within this big, again, this is our playing ground. This whole yellow box, this was a zone that I identified, but breaking it down in smaller time frames while you're seeing what all this stuff means is a good example. So when this had initially happened, it shot out 53 pips. Price is moving down, price is moving down, price is moving down. You see how price came right into here to grab this white space and this portion of it? Came right into here. This wall, this wall, we call those, I love the wall. Wall's a racetrack. Wall means when you have a wall, especially on a 30-minute or an hour, price might do a little up, back and forth, but price is going to clear to the bottom of that wall. And it's going to come grab this white space below, just as it did here. It came down here, grabbed this white space, boom, and moved up. Honestly, I remember seeing this trade earlier in the day. I was on my way to the gym, I think, and I was on my phone driving. I'm not saying you shouldn't drive and trade, but it happens. I saw this driving to the gym, and it was close to 4, so I was like, yeah, it's close to 4 Dallas time. So 5 o'clock, that's when that's the dead zone. You don't trade during that time because that's when there's rollover and everything's closing and reopening up and the new day starts. Spreads, I think, spread will go to 20, 30, 40 pips, especially on something like Euro Aussie. So at the time, if I would have saw this, I see right here, there's a 4:30 candle. This is 4 o'clock right here. I would have liked to have had this portion. Came right into here. This would have been at this point. This would have been a very small. This would have been a 10 pip risk. I remember checking like 3-4 hours later when price was, probably somewhere around here. It was already in here, and I was like, I think it actually had moved out. No, this is when I checked. That's right. I checked it when it was up here. It's like, oh man, I missed that trade, whatever. I'd already missed it. But I continued. I checked it later on that night, right before I went to bed, and it was down close to where the box was. So I just went ahead and took the order. But I share all that because even with this is a pretty big zone, especially for me, because I usually don't take zones that are this size. Just because I don't want to take that much risk. But again, I took a small position and I was okay with it because I'm just trading small, so I'm okay. If I was trading larger, there's no way. If I was trading a standard or a couple standards, there's no way I'm taking a 40 pip trade. I don't have to. I can sit there and be patient. Look for this, right? See that right here too? Boom, big strong move in. I have a big move in. I have a boring candle, the small body with a lot of wick. Could be, we like it better with either side, but there's a wick on the top side, so that's okay. But I have a strong move in, a boring candle, boom, strong move out. See how it shoots out of there? I didn't have to take this whole thing. If I was paying more attention, if I was at the gym paying attention to my phone and not working out, I would have grabbed this piece right here. But I didn't. Like I said, I was driving. It was close to 4 o'clock. I was like, yeah, I'll check later. But sure enough, it came down in here, grabbed that, and took off. But I still know the rules, and I use time frames, and I got in the trade later on based upon everything that I'm teaching y'all here right now. Is white space making sense, or does anybody have a question on that? No, we good? Everybody good?
It's making sense.
Okay.
Just need to see it a lot more.
Yeah, definitely. And again, I'm giving you guys a quick condensed version to give you guys an idea on this particular style that I'm teaching y'all. Again, the school that I used to go to, I would take 5 to 7 day courses with a particular instructor in Forex or futures or whatever. And just a little story time. by that time, I'd probably taken 10 or 12, 5 to 7 day courses at that time. Typically, I wasn't really traveling at that point. I was just doing it at my home center. The school has centers all over the world, really. So I was at that time I was at home. But I had a family member, several of my family members have been members of that school as well. I had a family member who was taking a class with this instructor, and he kept telling me all week, it's so crazy, you got to see this, you got to see this. Because I'm just used to what the normal stuff is. I was like, I have heard about it all week long. I think it was finally on Thursday. I was like, no, it was Friday morning. I came in on Friday morning, and I had as much class as I'd already taken. I'd never seen anything like it. Usually a teacher comes in, they teach you some stuff. People kind of get it, they kind of don't. They don't give you real right here, right now. This is how you learn how to identify trades, take them, and make money. And I came in on a Friday morning, and I'd never seen anything like it. There's 30 students in this room with their computers, all that stuff. And everybody in the room is calling out trades. Euro Aussie, up at the setup, 30-minute. Like a student would say that, somebody would write it on the board, so people would go look at it. People were just calling out trades. Students were making money all week long after learning this, and from 1 week of class. I think I've taken with this instructor, 10, 12 times I took his class, 5 to 7 day courses. And these are like, we'd start at 4 a.m. till 2, 8, 10-hour days, sometimes twice a day. So I've gone around, I've done this a whole lot. But the beautiful part about it is it's very teachable. You're probably not going to get it all the first session, but a couple sessions of this, you guys are going to get it. I've spent a whole lot of time doing it. I know I'm kind of jumping around a little bit, but the more and more you guys see this, I promise you, it makes so much sense. And it's hard to go to anything after you've actually learned this and understood it. Like you don't care at that point. You don't care what people's trades are. Like I don't care what your trade. I don't mean this rudely. Like I'm not interested in what other people's trades are because I know how to identify good trades and make money. And when you follow the rules time and time again, when you follow the rules, you will you'll make money consistently. When you break the rules, you don't. When you follow the rules, you'll make money. And a good way to look at this particular style, we try to emphasize the dollar amounts don't matter. It's all about pips. If you can learn how to make pips, consistently make pips, the dollars will come. Because who cares? You can load up and buy 10 standards and have a trade move 3 pips, and you just made, what is it, 10, 100? You just made $300 if it moved 3 pips. Well, that's, oh great, $300. Yeah, but you trade 10 standards and it moved 3 pips. But if you traded that on a micro or something, you're making like 3 cents. Not exciting, but if you learn how to make pips, you will make the dollars. So this strategy here is about, if you can learn how to make 30 pips in a day, there's swing trading, there's longer time, higher time frame trades. But if you're trading in the London session, the US session, that's the best time to be trading, 3 to 10 a.m. roughly, depending on where you are in the country. The London sessions controls the largest portion of the market, 65% of the market, then the U.S. crossover starting around 7, 8 o'clock, depending upon where you are. That's where all the volume is. That's when you want to be taking trades. Also, when we're, time of level creation, you see that on the list too, London and local session. I'm usually only taking zones that were created during the London and or U.S. crossover portion. But if you can come into the market at 8 a.m., get on a 30-minute chart, look for an uptrend with the setup, and then go down to a 5-minute chart to identify your zone, your strong move in, boring candle, strong move out with white space created, during trading, good trading hours, a London session of the U.S. crossover, that's money right there. And okay, you might find a little trade. Okay, this trade right here, I have a 4 pip risk. I have a 16 pip target. And we'll get into targets later and show you how to choose your target. But I can come in and grab real quick, risk 4 pips, grab a quick 16 pips. Then I look for one more trade. Maybe I find another 5 pip risk for another 15 pips. I'm at 30 pips. The goal is, I know some of us have $50 in account, some of us have $500 in account, some of us have $500,000 in account. If you can get in the mindset of learning how to make pips every day. If I know how to make 50 pips today or 30 pips a day, and you get to the point where you can take a standard on all your trades, that becomes $72,000 a year through the trading days. If you're trading all the trading days, Monday through Friday, and you learn how to make 30 pips a day, just 30 pips a day, and you get to your account to the size, and you're going to need between $2,000 and $5,000 in your account once you have your account at that point, and you're able to take a standard on basically every pair out there. If you can learn how to make the 30 pips a day, and this will show you exactly how to do that, you're making 72K a year. I don't know what you guys are making right now, or if you have jobs, you don't have jobs, but that replaces your income right there. So it's really powerful stuff. And again, this trade, I've been up almost 100 pips on this. I could have done that off of identifying this little 10 pip area. Again, I got it up above because it already moved out of there, and I just went ahead and put the whole stop on there just to cover it because I knew it was going to work. But yeah, so that's kind of a big, quick overview on what this is. There's a whole lot of other stuff to show y'all too, but this is the basis of it. So we'll go through some more examples so that way you guys are understanding. Again, right now, ignore the box, but we'll go here on the daily. See, this candle's kind of fluttering. We're going to pretend this candle is, let's make it actually even easier. That candle's gone now. Okay. One of you who's been speaking, any of you can, I want you guys to just walk me through this one and tell me what's going on. So do I have a volunteer for that? Anybody?
I can do it.
Okay. So here, step one, we'll go back to the left side. Step one for identifying trend. Again, guys, we're always wanting to trade within the trend based upon meat and potatoes. There's appetizers and desserts, and that's further along. We gotta do this stuff for a while in a couple sessions, and then later on, if you guys like this, we can get into appetizers and desserts. But so step one of trend, trading within trend. What is our action candle color?
Red.
How many red?
2.
Right, these 2 red. Okay, we then go to step 2, identifying our anchor candle. What is our anchor candle color? What's the color to the left?
Green.
Green. How many green?
2.
1, 2 green. Okay, that's our anchor. We then mark our high and our low of the anchor, right?
Mm-hmm.
So we go to step 3. Is it sideways? What is the color to the left of the anchor?
It's red and
Red.
not engulfed.
Yeah, red, 1 red, and it's not engulfed. The red is not bigger than the 2 green. Okay, so then we go to step 4. Control candle. Who's in control? The highs or the lows? We take
Looks like the low.
Looks like the low, right? We take the high side, we go left, way back here, we don't even see it. We take the low side, we go till we hit a wall. We hit a wall right here. Everybody see that? Then we have to go down and look for the color change. 1, 2, 3, 4, 5, 6, 7. These 7 green candles are all 1 candle. All counts as 1 because it's the same color. So we go down till we get a color change. Where's the red? We have green, 7 green. Where's the color change? Right there. It's red. So we would mark that. Just giving everybody the visual. Yeah, you guys get it. Sorry, my OCD is bothering me right now.
Zoom out a bit.
What's that?
Zoom out a bit.
Zoom out. You guys see that?
Yes, thank you.
Yep. Okay, so step 4, we on the high side, identifying who's in control, the highs or the lows. Highs over here, it's way further back. Low side hit here. So who's in control, the highs or the lows?
The lows.
The lows. Okay, so if the lows are in control, what kind of trend do we have?
Is it up?
Yep, we have an uptrend. You'll see on the list under step 4, for lows, we have an uptrend. And then you see for highs, if highs were in control, we'd have a downtrend. Now we go, the lows are in control, so we have an uptrend. So now step 5, is there a setup? If there's an uptrend, what color do we need our action to be?
I think it's red, right?
Red, yes. So we're going to ignore that because it's kind of flickering. So we have a red action. So step 5, is there a setup? For an uptrend, we need to have a red action candle. Is there a red action candle?
Yeah.
Yes. Okay. So then we go to step 6. Step 6, is there a level break?
Is it the high or the low of the anchor that you're looking at?
Look at your sheet. For the uptrend, what does it
I
say?
don't have it.
Oh, you don't have it? Okay. On uptrend, it says cannot break higher lows. For a downtrend, cannot break higher highs. Meaning it can't break the. I'm gonna get that sheet changed. It should say just low of anchor. For an uptrend, it cannot break the low of the anchor, meaning a close. If it trades below, that's okay. Here's the anchor. Really, we don't want to close below it. Does it close below the anchor?
No.
No. Okay. So at that point, we have an uptrend with a setup. So once we have an uptrend with the setup, we then can go down to smaller time frames. Let's see what it looks like on the 4 hour. Let's see if we get it more clear. Oh yeah, I remember why I identified that one right there. Okay, that's off the daily. I'm a little more advanced, so this might not be as clear as actually, yeah, it's not going to be as clear as kind of the other example, but okay, so we have there. Yeah, this isn't really that great of an example because it's not clear. I want this to be clear so you guys see it. But basically, we have rally, base, rally, strong move out. We have basing here again, the move out. I broke this down. I marked this and broke this down for y'all earlier today just to kind of show. The thing I really want to show on this one is see how price came here, grabbed this white space right here, this one single wick here, and then boom, moved out, and it's continuing to do so now. I identified that off the daily. I used this daily wick as an area to identify as the trade, and then on the 60-minute, 4 hour, there's strong move in, basing, strong move out. This happens here again. This is all kind of part of it, but the main thing to focus on this one is off this rally base. This is your strong move in. This is your basing, boring candle. That is your strong move out. This is your white space. This particular example, really, you see it most clearly on the daily. So we're identifying trend on the daily and also taking a trade off the daily. A lot of times you'll really be going down to the smaller time frame. You don't see it so much on the smaller time frame. It's a lot of chaos in there. Looking later on, it'll make sense, but yeah, let's go to another example. Okay, here we go. This one should be good, hopefully. Okay. Anybody else want to volunteer, or I will walk through it if not. Either way. Have a volunteer? 3, 2, 1. Okay. Yep, was someone about to say something?
Yes.
Okay.
Okay, let's do it.
Let's do it.
Let's try.
So step 1, what is our action candle?
Okay, so we have 2 red action candles, or 3 technically.
3, yep, 3. And just moving forward as we're doing this example, because this candle's so small, it might flicker green and red, but we're going to keep counting this as red. So if it changes, don't get distracted by that. In this example, we have 3 red candles. Okay, that's our action, yes?
Mm-hmm.
So step 1, we have our 3 action candles. What do?
So then we identify our anchor candle.
Identify our anchor candle. One step before that, not to throw you off.
Yeah.
It's because it says ignore. We always identify our action and we ignore until we get to step 5. So I just want to clarify that. So identified our anchor, we ignore, or I'm sorry, our action, we ignore. Then we go to step 2, anchor candle. What do?
Okay, so then we have 5 green action candles. And we identify the high and the low. And And then we see that it's not engulfed by the 2 red candles.
Boom. Love it.
And then we go left until we hit a wall.
Mm-hmm.
And it seems like, yeah, it's the low.
Right there. And then
yeah.
what do we do though? We go, once we hit this wall, what do we do?
Well, we follow until there's a color change.
Yeah, boom. We follow till there's a color change. Color change right there, right?
Mm-hmm.
And then what about the high side?
Well, since in terms of time, it's like past the low, then we ignore it, I guess, or it's not relevant.
Because it's in relevance to time. We can see in time this hit here first. It's what one hit first in relevance to time. Low side it hit here, high side we can't even see it. It's so far back in relevance to time. It could be right here in price, but time it's way back. So it hit the low side. So is it an uptrend or a downtrend?
So low means uptrend.
Uptrend. Boom. Nailed it. Step 5. If it's an uptrend, do we have a setup?
Do we have a setup? Which would mean, is there a level break?
Nope. For an uptrend, we need to, our action candle needs to be what color?
Red.
Red. What color is it?
And it's red.
Boom. Okay. So we have a setup. Then we
I
need
have
to
a
do
quick question.
Yes.
So just to clarify, so then if it's high, it would be a downtrend. And for a downtrend, it can be either red or green.
No, if it was a downtrend, our action candle would then be green.
Okay.
Because we would the sellers would be in control. We'd want it to be green moving back up into our area to short.
Okay.
And we'll go through. I'll find a short example. But so for uptrend, uptrend, we need a red action. We have that, yes.
Mm-hmm.
So then we go level break. For an uptrend, it cannot break the high of the anchor. Is it breaking the high of the anchor? Oh, I'm sorry.
The low, right?
The low, yeah. Is it breaking the low of the anchor?
No.
Nope. It is not. The red action is not breaking the low of our anchor.
Okay.
So we have what we call an uptrend with a setup.
And then now we move in closer.
Yeah, now we move in closer to get a better perspective. We marked our anchor high and low. So here on the 4 hour, here's what it looks like on this is the high and low of our anchor, these 2 black lines. So this is our playing field. So now as of this point, anywhere in here is our playing field to identify a level.
Mm-hmm.
Does anything stick out to you as of right now? I know this is kind of new to you, but
oh yeah, I'm trying to look for the wicks and the wall, and you said odd numbers as well.
Yeah.
I guess maybe like the green ones.
Yeah, the biggest thing to look for first is strong move in, strong move out.
Okay.
So here we have what I see right now, and this is what it's hitting in right now.
Mm-hmm.
I basically would look at this whole pattern here. There'll be more clear examples. We'll see this, but when you see how this wick's right here, it's a little bit longer. This wick's shorter, right on the high side. Do you see that? I know it's probably a small screen, but you kind of see that?
Mm-hmm.
We have a little wick here, longer wick there. I'll start finding some examples to show y'all. When those lines are even, if these wicks are even, you can see more so here, is a little bit closer to being even here. When you go down to a smaller time frame, every time you're going to end up finding candles like this inside of it. A boring candle with pretty much even wicks. And I'll find an example and show you guys later. But so here on the 4 hour, we're going to find it. It might be a little bit sloppy when we go to a smaller time frame, but I want to identify this because here we have a big move in. I know on a smaller time frame, this is a big rally, big move in. There's going to be basing and there's going to be a big move out. I guarantee you, I'll put any amount of money on it right now. There's going to be a smaller base. There's going to be still this move in, a smaller basing candle, and a strong move out. Same thing here with this pattern here. So that's why we're just going to go ahead and identify this whole zone right now on the 240. 4 hour. So let's take it down to the 60 minute. Okay. So here we are on the 60 minute. Sure enough, we have a strong move in. Do we not have a boring candle with a strong move out? You see that? Strong move in, basing, boring base, strong move out. That's a super, it opened here, went up a little bit. That's a very bullish candle. And then again, we have a big, strong move in. We have a boring basing candle with a boom, huge move out. How'd I know that? I knew that because here on the 4 hour, because I know it, when I go down to a smaller time frame, there's always going to be, based upon that formation, there's always going to be small basing candles in there based upon a strong move in with these wick on, we call it wick on wick overlap. When there's a wick above and a wick below, that's wick on wick overlap. Typically, we like those to be even. That's when it's super clear, but I know here it's still going to be here because I've done this enough. But typically we want those to be even because I know as soon as I go down to a smaller time frame, there's going to be strong move in, strong move out, boring candles. Off of every time it's going to be like that. So just to show how precise that is, I'm going to go ahead and mark just that area. This wick on wick overlap on this here and this here. So let's go to the 60 minute. Oh, wow, look at that. That's the one that I drew. Is that not a strong move in, a boring candle with a strong move out?
Yeah.
And then this one's a little bit above. We go into a 30 minute. We'll probably nail this one too. So that's the area I identified up above. On a 30 minute, we're going to see this on a 30 minute. But also look at this too. See how when this had happened on the 60 minute, there's this one single established order of white space. Price came in here, basically cleared all that out and then shot out of there. It hasn't come back down into here, but let's go ahead and mark this one too. Now we have another big move in, boring candle, big move out. On this one, this is going to break down. There's going to be a boring candle and a base in here with a strong move out once we go down to a 30 minute. And then we'll see how the rest of that breaks down on a 30 minute. Oh, look at that. These boxes that I drew, that was the other one here, that other portion. Strong move in, boring candle, boring candle, boring candle. Very nice move out. This is that other area. 3 boring candles, strong move in, super bullish candle, strong move in, strong move out. Boom, another boring candle, strong move out. Price came in here. You see the white space here. Price came in here, grab that white space and send it out of there. We can break it down to a 5 minute. And this area here, there's going to be more smaller basing, strong move out, but hopefully you guys are seeing that. And that's all off of here on the 4 hour. I drew this box because I know with this strong move in, wick on wick overlap, strong move out. I knew on a 4 hour, just because and you guys will too, as we continue to drill this, when you guys see this, you know, when I go down to a smaller time frame, I go down to a 60 minute, I have strong move in, boring, strong move out. I have white space. What time was it created? This candle started at 3, goes all the way to 8 in the morning. This is prime time trading. This is the London Open, end of the U.S. crossover right here. These are the areas that we want all the time. This is the zones we're looking for. So we have on our right side, we have move in, move out, right? We got boring candles. We got boring candle right here, right? Is it fresh? Is it fresh when this had happened? Had price come back down into this area yet? No, price hadn't. Is it authentic? We got to look to the left till we find a wall. We'll see it easier on the 4 hour just for. This is this area here as we continue to move left. Yeah, boom. It's hitting walls all through here. And you'll see because price was moving down. So whatever buyers were sitting here previously, price moved through it, came all the way down, all the way down, boom. And then it's making its move back up. So there were sellers sitting way back here, but this pattern here, that broke through all the sellers. It said all the sellers that were sitting there way back here willing to sell, it said, no, we're having a fight right here. We're the buyers, we're taking this higher. We don't care what you're doing, sellers. We're going to chop it out real quick, and then boom, we're going to shoot through. So now, because there was sellers before, now the buyers have taken, sellers were in control. Buyers retook control, cleared out all the sellers. So that's now authentic, because this is an authentic area because it cleared out all of the previous sellers that were sitting there. Now the people are everyone's selling. It's selling somewhere between here and where the current price is, because all the other orders got cleared through by the buyers. New sellers came in, started sending it back down to, as of this point, all there is here is established buyers. Buyers are sitting here, so that's authentic, because it cleared out the sellers all the way to, you always got to look left, go all the way left to see who's over here. It cleared them out, so it's authentic as well. Is there white space? Yes, there's white space here. There's a single wick. There's a single wick alongside a wall. There's a single wick alongside a wall. We're on the 240. And then taking it down to the 60-minute, is there white space? Oh yeah, there's white space here. Makes it a little bit bigger. There's white space. And again, you go through the patterns right here, that small. Actually, let's do this. Why not? You see here how there's 2 wicks alongside a wall to this area right there. You see that? There's the 2 wicks. Whoever was speaking before, are you still there?
Oh, yes.
Sorry, I can't see. I don't know what I did to the screen. I don't know who I couldn't see you speaking. But see right here, we have the 2 wicks.
Yeah.
Established, cleared. Boom, that's cleared out. But then all the way down here, this wick all the way alongside a wall, that's established wick. That's established white space, that whole portion. Then we get here, do we have the 2 wicks matching? From here to here, that's a what? That's a 2 count, right? 1 wick, 2 wicks.
Mm-hmm.
So that's cleared. Okay, that's cleared out. But you also have the exception, because it goes down below for the pattern on white space. You have the 2 uneven wicks here. Mm-hmm. The way I look at it, that's cleared. But in reference to taking this whole box, that's an exception to the rule. But if you're being super selective about it, like if I wanted to like snipe a trade, I would just have this last little portion of white space identified if I wanted to grab that portion, or keep moving down. So below here, again, we have the last little bit of white space. We move a little bit further down. This little area, these 2 wicks here, established, cleared. The 2 wicks, that second wick clears it out. But this whole wick all the way below, that's all white space. We want that. We're looking for that. Down below a little bit further, boom. Okay, here's a perfect example of wick on wick. This matches right here on the 60, right? I'm gonna go ahead and I'm gonna draw a new color line. So let's go with we'll go with green. Boom. Okay. So again, white space, white space, white space. But I'm gonna go ahead and here. This is a perfect example of true wick on wick overlap. You see how this wick is even with this wick? Go ahead and even measure it. This wick right here is basically 7.5 pips. This wick right here is 8.7. They're basically the same. It's not exact, but they're basically the same. You look at it and you see they're basically the same. It's about the same amount of wick as that is. That's a perfect wick on wick overlap. Watch when we go to a 30-minute chart. How there's going to be, inside of that, on the 30-minute chart, there's going to be boring candles inside of there, strong move in, strong move out. See how I identified the green? Strong move in. Although this is kind of a boring candle, it still is a very bullish candle, because you have this move in. Actually, no, yeah, you do. You have this move in right here. What am I talking about? You have that strong move in right here, boring candle, strong move out. How did I know that there's going to be boring candles in there with a strong move in and a strong move out? How did I know that? Because on the 60-minute where I drew the lines, I have basically an even wick on wick overlap. These 2 candles have a wick, basically even wicks on top and bottom. That's wick on wick overlap. I know every single time, without fail, as far as I know, there's going to be a strong move in, boring candles, and a strong move out. We like that. That's what we're looking for. What time was that created? 4 in the morning, 4:30. So this whole overall zone, this is what? This is 103 pips. Because our anchor is 493 pips, it looks like. I mean, that's a huge anchor. What's the ATR on this? 120 pips a day. Yeah, the only indicator you'll ever see on my chart is an ATR. I want to know what the daily ATR is. How much does this pair move in a day? And I want to know at other time frames too, but I'm not really so concerned with that. I really want to know what the day moves, because how much does it move in a day? Because I would like, if this moves 120 pips in a day, I would like to try to identify an area for a very small risk that I can take, that I can try to grab that 120 pip moves. Because in the day, from high to low, it's going to go 120 pip average. It's averaging ATR, just so if average true range is what that stands for none of y'all have seen that or heard of that. Average true range, ATR, is what people refer to it as. Typically, unless you mess with it in your computer, it's going to be the last consecutive 14 days or 14 time period. 14 candle time period. So if we're on the daily chart, it's going to take the average of the last 14 daily candles and give you an average. And right now it's 127 pips. You can see here this little number down here at the bottom left, ATR 127. See how I bring my mouse under here? It's 127. I go one day over, it now changes to 135. One day over, 135. Maybe it's not doing what I thought it was. No, 120, yeah, 122. Okay, it changes day to day. That day to day, at this point, the last 14 days, that's what it was. At this point, the last 14 days was 135. Right now, it's 127. Over here, it was 118. Over here, it was 124. But this is averaging 120 something pips a day. So the anchor on this is huge right now. I mean, it's almost a 500 pip anchor. So again, we identified that area to play with. So now it's like, okay, we're not going to take a 100 pip zone. So how do I come down to the smaller time frame and try to identify a good area to trade? I saw that. I wish I would have said that before we just went to the right. The one that I like the best out of all this is this rally-based rally right here. Out of all this stuff, we're on a 60-minute chart. The higher the time frame you can get the pattern you're looking for, the stronger it's going to be anyways. I love this rally. That's a huge green candle in. That's a perfect basing candle, and that's a huge green candle out of there. Let's see what the risk on that would have been. That's a 29 pip zone. So you have white space, you got strong move in, strong move out, strong move in, strong move out, boring basing candle, you got white space. Created at what time was it created? 6 in the morning. That's a good time. Time at level creation, the London or US crossover. Boom. Sure enough, price came in here. Came right. Look, oh, I love it. I love it. Let's make that black again. Actually, we'll make it green just so there's a lot of black ones on there right now. See when this was going on, if we were looking at this area, at the time you had 2 wicks alongside a wall, right? And then down below you had 1 wick. So at the time, those 2 wicks, that was established until price came back and grabbed those established orders and took off. When we see a 2 count next to a wall and an even number of wicks, that is cleared out. There was at one time established orders there. Then when it became an odd count, they cleared them out. There were orders here. Price came back into it, cleared it out, and left. We don't have any other information to base this off of. We did at that point when it was 1, but when it came and grabbed those and took off, that's now cleared out. Now the only orders are sitting in here. Watch how this happens. When price gets back to it again, look at this wick right here. You see how this wick came all the way down. It didn't grab this cleared portion. It came into here and grabbed this white space. See this portion right here? It came all the way over here and grabbed. That's all it needed was this little bit of white space, and it took off. It didn't come to here. And if it would have, then we could have used that to base for further trading. But at current time, how that was, we wouldn't want that portion. We would have taken if we identified our zone, we could have identified right below the white space for a 12 pip risk to take this zone. And you see here how these wicks are so far apart, that doesn't count as the exception to the rule. Like I said, if this wick would have been right here, yeah, you could have taken that section. But this wick is so much bigger, this portion counts as cleared out. It's always cleared out anyways, but the exception is if this wick would have ended right here where this green line is, then that would have been an exception to the rule. But sure enough, price came right into this white space, boom, and has taken off out of there. And now you see it's working its way out of that zone. And so again, we could have taken anywhere in this 100 pips, we could have taken this whole area for 53. Again, I like to sniper and try to really lock it in and get it exact. This is the kind of stuff that I look for. I look for this portion right here. 10 pips, I'd have a stop a little bit below that. Oh, also, okay, because I've seen kind of in different group chats and whatnot, people are like, oh, I had my stop and it didn't even hit my stop, but it stopped me out or something like that. There's a thing called the bid and the ask on every pair. You know, you see here on this pound pair right here, between the bid and the ask, that's what the spread is. I'm sure you guys have heard of spread. There's a 4 pip spread right now on this. Let's see if I'm putting more right. Yeah, usually it shows it right there. But you see this number here, 1.7514 to 1.7518. That means,
excuse me?
oh, do you guys see right here on the very bottom right, this blue and red boxes?
Sorry, yeah, I just have a really quick question about something that you said just before that.
Ask away.
So when you identified like that red wick, when you go in to like buy, what you're predicting is that it's going to come back down to that point and that's going to shoot back up.
Yep.
So you're predicting like that level.
I'm predicting, this whole thing again, I'm looking to follow the left side to identify an uptrend with the setup. I'm looking for an uptrend with the setup. Then when I do that, I go to the right side to identify a zone. I use the left side to identify what the trend is. I'm looking to take an uptrend trade. I'm trying to take a long. Once I've identified using the rules that I do have an uptrend with the setup, I go to a smaller time frame to start looking for big move in, big move out, boring candles, white space, fresh, authentic, at a good time of level creation, meaning the London session and or the US crossover with the London session.
Okay, so then you would have said to like buy at where it says like 1.7459 around there.
Yeah, so what I would have done is gone right here, trading. I would have done buy pound CAD, 100 units, take profit. We'll look at the chart to see what it was. Let's just say it was 100, okay? My stop loss, remember I showed that white space was about 10 pips. You go a little bit below it. I'd go to 12, or you go to a smaller time frame, breaking down the patterns to see what's below it, to see if you want to, how much coverage you want to have. But so I would go right here. I would submit an order. This is a buy limit. This isn't a market order. This is a buy limit order. This price is up. When we did all this, price is up here. So once price came and hit that area that we identified and we set an order sitting there waiting, once price came in, sure enough, it didn't even come in a pip. I mean, that's like, what is that? Yeah, it's a pip. Came in, hit our order, triggered our order, and then started moving its way up.
Okay, awesome. Thank you.
Yep. Cancel that. And back to the spread. I don't know what all everyone is trading on, what platform you use. I use a Wanda. I've just been using it for years. That's what I'm comfortable with and familiar with. There is a bid and an ask always, and that's the difference between what is somebody willing to sell it for, and what someone is willing to buy it for. So here on my chart right now, you'll see this. I have mid, but if I change it to the ask, see how this wick is no longer in this box. If I go to the bid, see how the wick changes? See how the box changes? You guys seeing that? Right here?
Yeah.
I keep it on mid because it's about an average. But if you are going long, you want to have it on the ask. I would want to make sure that I had my stop below the ask wick, not the mid and or really even bid wick. Let's go ahead and mark it. We're going to mark it. I'll change the color to, let's go blue. We're going to mark that on the, okay, let's see. We had it on the mid. Let's see where it was on the mid. Okay. So we would have been good if we had it on the mid. But you always want to check your ask. And I know a lot of people trade on their phones, so it's not as easy to do. But you want to see what it is on the ask and bid. Because when price is moving down, yeah, see, okay, no, it's the bid. The bid is what you want to have it under. You want to have it under on the bid. Because when price is moving, because of difference in spread, the chart looks different based upon if you're going long or going short, and if you have your chart on a bid chart or an ask chart. I know it sounds kind of confusing, but that's why some people are seeing you've been in trades and you got stopped out, but you saw where your stop was and nothing ever touched it. Well, it did touch it. It was just on the bid or ask or whatever the inverse is to whatever chart you had it on. So you always need to make sure that you're covering yourself on whatever chart it is, or for a rule of thumb, you just give yourself a couple extra pips. If you don't feel like, because hey, sometimes we get late. A lot of times I get lazy. I really don't care to check a lot of times. If I'm being super selective, well, I've been trading on a phone, so I really haven't been, but I'm on a computer, I'm super selective. But if you don't want to take the time to go click ask bid or mid, just give yourself, if it's a 12 pip zone, give yourself an extra 2 pips, maybe 3 pips, just to give yourself that coverage of the difference between the bid and ask, or take the time to go through the charts and then really break it down. But hey, who's got 5 seconds to click a couple buttons? I don't always have 5 seconds to click a couple buttons. So, there's ways around that. Yeah. So that makes sense for why we would select that as our area. Or this whole thing is our area, but as we break it down in time frames, what the white space means, what the boring candles mean, what the move in, move out, is everybody kind of getting that?
Yes.
Yeah.
Cool. Let me see real quick. Oh, there we go. There's everybody. I literally haven't been able to see everybody this whole time. I closed this out a while back. Hey, and I can see people's faces. All right. Yeah, so what time is it? We've been in this for almost 2 hours. You guys want to go through a couple more examples real quick? You guys getting it? Also, moving forward, if you guys found this valuable and want to learn more, I'm very willing to show you guys this, and I'll do a couple sessions a week, whatever you guys are wanting. If you guys are enjoying this and want to see more, I promise y'all, this stuff is crazy. You can make all kinds of pips with very, very little risk. And that's what I'm about, trading within the trend. Some other cool stuff. I'm gonna give you guys a quick little snippet too, just because we're here. Why not? Actually, I took some notes and some stuff I'll pull up. Let's see. Boom, boom, boom. Put that here.
I just put it in the chat, even though I know you can't see it. Do you have any contact?
What's it?
Do you have like email, phone number?
Yeah. If somebody wants to type this in the chat so everybody can see it, anyone that knows me can do it too. Y'all can take my Insta and hit me up on there. If you guys have any questions anytime, I'm more than happy to answer questions, whatever. Honestly, the more people, here's the cool thing about the more people that we get trading in a particular style, we're becoming more of like a hedge fund. The whole purpose of trading is learning where the big money, the hedge funds, the institutions, the banks, the countries, where are they trading at? All of this they're the giant whales. What we're doing is learning, we're like the feeder fish jumping on the back of a whale. They're coming in with hundreds of millions and billions of dollars making moves. We're just learning how to identify exactly where they're at and where they're going and just kind of sneak in with them and move along with them. But the more people we have that are seeing the same things, that we're all seeing the same things and all taking the same trades, we now have a larger buying power. There's more of us sitting there. If price comes down, if there's $1 million coming down, we have leverage to a particular area, but more of us see that level and identify and have our money there. It's a stronger possibility of sending it up. So that's really powerful. But yeah, I'm here to answer any questions, help y'all. We're all in this together. But my Instagram is Get Ninja Fit. So GET Ninja NINJAFIT. If someone wouldn't mind typing that into the box. I mean, you guys are pretty smart, I'm sure, but Get Ninja Fit is my Insta. Add me, message me, whatever. You have any questions, we can go over all this stuff. But just a little sneak peek at dessert and appetizer type stuff. When we are not trading meat and potatoes, when we end up having something sideways or we have an anchor break or whatever it ends up being. We have all this other stuff that we have the ability to do. And this is, oh, yeah. I drew this earlier today. I was around, I want to say it was middle of the afternoon. I want to say something like that. I drew this earlier today, or last night or something. I don't remember what it was exactly. I think it was earlier today, right? Yeah, okay. So again, super kind of advanced, but typically, I'll just go through it real quick. Typically, this would be our action candle, the green candles, boom, we ignore it, we go to the left, we have a red anchor, go to the left. Sellers are in control, right? As of this point when this is happening. Sellers are in control because we hit the high side, we get the color change up here, we go to the low side, way over here, we don't even see it, irrelevant. Sellers are in control, okay? We're not engulfed, sellers are in control. If the sellers are in control, what color do we need our action to be? Step 5, we need a green action candle, blue action candle, green action candle. We have that. Then step 6, is there a level break? Is our green action breaking the high of our anchor? Yes, it is. So typically we skip it, we move on, right? That's what we've learned so far. But we have this is again, we'll get to this stuff later, but this is what we call anchor breaks. We like anchor breaks also. It's a whole separate set of rules. It's a whole separate strategy. It's a whole separate thing. We have anchor breaks with what we like to also, I need you guys to, I'm at this, when in reference to this box, okay, well, let's make it actually real clear. You see the box here, this little yellow box, the bigger yellow box. This is when this is happening right here on the 60-minute chart. When we go to the 4-hour chart, see that's these same yellow boxes. So price was really just like right in here. See how this is a giant wall? This is just one solid wall. There's no wicks in here. There's no basting in here. There's no anything in here. It's just a solid wall, right? If we go down to the 1 hour, this is basically that same wall. There is a teeny tiny wick right there. You can see, but that's nothing. Make it even bigger. See right there? That's a really small wick. It might look kind of big right now because we're zoomed in, but you see it right here. You see that little wick? Everybody see that? When we go down to what this chart normally looks like, we go to the chart normally looks like, you don't even see it. Like it's barely even there. So I just know what this is. This will be the only point of opposition that we could have, but that's still the same thing. It's 2 red candles, like we're looking at the 4-hour candles. That's what we call a racetrack. When we have a solid candles, either I love no wicks at all. On the 4-hour, we have no wicks at all. So we have a solid 4-hour racetrack. I would prefer it to be a solid racetrack on the hour, but no big deal. It just means on the hour, it might take longer to get through that and do its thing because it's on a higher time frame. When it's on a 60-minute, that's just a straight shot, meaning like when this stuff was happening, this candle opened here, went down, went up, closed right here. Then the red candle opened, went up a little bit, boom, shot all the way down and then closed right here. That's a big, powerful, explosive move. That thing went 37 pips in one candle, one straight shot. And then when you count the other one, or really to this point, 18 pips, 37, 18, rough 55 pips right there. That's a huge 55 pip, 2-hour candle basically. So back to when we were identifying this right here, when we had downtrend with the setup until we had the anchor break. Once we have the anchor break, we then can either use, you can use a 5-minute candle, you can use a 1-minute candle. When this is going on, when I'm getting a close up above that anchor, meaning at this time, I'll go ahead and mark it. We'll mark it. I like to mark on this time frame. I like to mark this light blue color. This is marking the top of that anchor. Going down to a 30-minute, and there's a lot of. Let's move this out here. We'll just get that out so you guys can see clear. No, I deleted the box. Oh well. It's that blue line is marking that anchor. Once I get a close above that anchor, I'm also. This is going to break down a couple different things. Once this is happening, I am on the 30-minute time frame right now. When this actually happens and this closes, as soon as price trades anywhere down below there, I now have a red candle. If I have a red candle, I have a red action candle next to a green anchor. Make this bigger. A green anchor. Okay, well, yeah, this will show more clearly. Count these as your 2. This was our close, but those 2 are our 1. We then have a red action candle, right? Red action candle, green anchor, 2 candles, not engulfed. Lows are in control. Lows are in control. What colors are actually to be red? Is a red breaking the bottom of our anchor? No. So we have an uptrend with a setup. I then have this rally-based rally right here. But guess what? See how I marked that line? See how price literally comes right back to that, right to where that, it'll do a couple things. One, you can just take the straight break out of it. And again, we'll get much deeper into this later on. You can take the straight break out of it. I get a minute close above it. I get a 5-minute close above it. I can use color change to the upside, meaning a green, red, green candle moving up, a green, red, green moving up out of there, a green, red, green moving out of there. I can take that on any time frame. I can use the higher time frames or smaller time frames, or a lot of times you'll have a retracement right back to the area where the anchor broke. We had all of it here. It retraced back to that area. That could be your entry. That's a little bit safer one. The breakout one's a little more aggressive, but you have a reason to come back and take that, to take it long, trying to capture this wall. And what is price? It's literally about to the top of that wall right now. This happened. This finally broke at 9 o'clock this morning. This broke. Wanting to get this piece, or here on the 4-hour, like you see more clearly, that was a big solid green. It wants to get to the top of that green right there. There's no white space here. The white space is until up here. That's the white space it wants. It doesn't care about this wall. It says, I have a big wall right here. I'm going to get to the top of that. That's a racetrack. On the 60-minute, you see it here. You have the 2 red candles. That's our racetrack. Boom. And sure enough, it came here. It's moving its way up. Now I'm going to show you guys this on... It deleted on. Why did I delete on? That's weird. Here we'll go. Let's take this down. So this is roughly that area where the yellow box that I deleted was. That's our blue anchor break line. Actually, you know what? Forget the box. We're just going to a 5-minute chart right now. I'm going to show you this. This is going to be cool. I love it. This is the other yellow box that we didn't delete. That was, I don't know. These boxes are being weird right now. Anyway, don't focus on that right now. But here's that blue line. This is where on the 60-minute, that represents the area, because at one point, when I was first showing it, that red candle was the anchor, right? That was the anchor. Price came above it, closed above it, broke the anchor. That was step 6. That's why we no longer had a downtrend with the setup. We then had an anchor break, and that line represents the high of that red anchor. When we go down, once that has happened, the high of that red anchor, we're now on a 5-minute chart. You see here on a 5-minute chart, all we needed was I needed a 5-minute green candle to close above that anchor line. I got the green close above that anchor line, so I could have just taken a market order right there. Boom. It's aggressive, but I could have done it. Or I could have looked at it. Okay, here's the anchor break line. Price usually wants to come back to the anchor break line. It usually wants to come back. But guess what? Right below the anchor break line, do I not have a wick on wick overlap? Wick on wick overlap, right? What is a wick on wick overlap? I have a wick on wick overlap on the 5-minute right below an anchor break line. I have white space. I'm at a good time of day, 9 o'clock in the morning. Hey, let's see what it looks like on the minute chart. I guarantee you there's going to be a strong move in. There's going to be a strong move out. There's going to be boring candles. There's going to be white space. Oh, how about that? What do we have here? Do we have a strong move in? Do we have boring candles? Remember, it was a 5-minute chart. That was a 5-minute candle. I have that now we're on a minute chart. Make this bigger. I have a strong move in. I've got 1, 2, 3, 4 boring candles that are a part of that 5-minute candle. And then the last of the 5-minute candle, boom, strong move out. Strong move in, boring candles, strong move out. Back outside of the anchor break area, That's what had that closed up above on, remember on the 5 minute, I broke it down to a 1 minute, big move in, basing, big move out. I saw that on the 5 minute. Now I'm showing you on the 1 minute. What ended up happening? Price came right back here into that area and boom, took off. Let's go to the 5 minute. Where are we at right now? I don't know why that box is here. It's being weird. It went way left for some reason. Sometimes the charts will do that. They just send you to a completely different area that you're not at. You see, like, send us back like days. I don't know why. All right, here we go. Back to the 5 minute charts. So again, when I was showing you guys, that was this candle right here, this one right here, was the 5 minute close above the anchor break line. Right below that, I know price moves up. Price usually wants to come back and test it, but right below that on the 5 minute chart, I see the wick on wick overlap. I don't even need to go back and look at the 1 minute chart because I know already there's going to be a strong move in, there's going to be boring candles and a strong move out. And sure enough, what happened? Price came back down. I'll make this even cooler. Price came back down and look where this wick touches. It gets right to where the white space is on the 5 minute. We get down to a 1 minute, you'll see it even more so. But this came right down to the white space, the wick on wick overlap, the boring, the strong move in, strong move out, boring candles inside of here, came right back inside of here, grabbed this, move that line because that's our anchor break line. And now price has just been moving on up. We'll go to we'll make this a 30-minute one. 30 minute. So you see here on the 30 minute even, this is that same wall. It's a little bit different picture on the 30 minute. We'll go to the 60 minute. There's that wall. Price on the 5 minute chart, boom, is moving on up. And it is now, honestly, you always want to have your target a little bit below that because, again, when you break it down on a smaller time frame, I see the top of the wall. That's the area you're trying to go to. But when we go to a smaller time frame, you're going to see a base drop there. You're going to probably see a base drop, strong move in, strong move out, but to the downside. So we want to have our target just a little. I would literally, on this trade, I'd have my target right about here. And it literally just touched that line. So that would have been a 48 pip trade for a 5 minutes for a, what's the risk on that? That is a 4 pip risk for 48 pips profit. That's all that I do. I do that all day long. I look for this right here. I want a 4 pip trade. I want a 4 pip trade. I want a 5 pip trade, and I want to get 50 pips off it. I want 10 to 1. I want to double, triple, quadruple. You can double, triple, quadruple your account weekly. Like if you really dial in, follow the rules, take good trades, take good setups, you can do this all day long. It is there all day long. When I scan the charts, like this is how I normally do it. Pretty much. Let's keep this right here. Pretty much all day. I'll come right here. I'll go to Aussie CAD. I'm here. I'll identify this. This is let's call this red. This is uptrend with the setup. I then go to the 4 hour. I start breaking that down. Really, what I do is you get a piece of paper. You guys probably can't see it, but I got New Zealand. I got on here. I got Aussie US 4 hour down. Euro CAD up daily. I'm going pair to pair. Next chart to next chart, looking for uptrend with the setup, downtrend with the setup. If I'm not seeing that, then I'm looking for anchor breaks and some other stuff we'll get into later on. I'm just going pair by pair, writing them all down. Then the ones that I've identified that have setups and or good anchor breaks with racetracks, I always look for racetracks when looking for targets. I don't ever get into a trade and like, 20 pips, 80 pip target just because 20 pips, 80 pips. No, I am looking at the chart, pure price action and knowing and understanding where price is at, why is price at where it's at, where should it be going to, with a set of rules to follow every time to identify an area for price to come to and touch just touch and shoot out of there to another area that I'm able to identify. It isn't just blind random numbers and numbers. It's literally, oh no, it's coming to this zone. This should come to this zone right here. If it doesn't, I might miss it on that one. Actually, I'm going to be more conservative. I'm going to take this lower zone because it looks a little bit better and I don't have to take as much risk. That's the zone I'm taking. And then it's going to this area. And we'll get into targets later. If you see walls, tops of walls, slightly below them, those are great targets. If I'm taking a trade where I'm setting up a trade and leaving an order sitting in the market, I typically look for a trade that I have a setup on and I have a nice racetrack that it will get to. It might have to chew through some stuff, but I'm always looking for a racetrack too that it can be getting to for my target. So I think that's a pretty good introduction, day one. Yeah. Good stuff. You guys like this?
Thank you so much. Thank you.
You're welcome. You're welcome.
Yeah, thank you. I know this was a lot of your time, but it was super informative.
No, it's all good. It's all good. Like I said, I've spent a lot of time doing this and I enjoy it. And honestly, the more that I teach this with y'all, it just makes me better. Because I actually personally, I kind of got away from trading the last couple of years just with other stuff. And like, I'm really getting back into it again. And I love helping y'all. Because to help y'all and y'all having the questions, it reiterates it in my own mind. And then it makes me that much better. And yeah, we're all winning and we're in this together. We're part of this network together. We're a movement. We're a wave, force to be reckoned with. And I'm telling y'all, when y'all get this down, like it's so powerful. It's so powerful.
Yeah, so they're already asking me like if you can set up like a schedule for us. Everyone is asking me individually.
Cool. I know you and I discussed Edwin Mondays and Fridays. I'm definitely good with the Mondays. Fridays should be good. If there's another day, that'd be maybe a little. If we do earlier in the day on Fridays, that'd probably be better. But I'm open. I'm open to do a couple sessions a week. No problem. We can do this on the regular. If that's what y'all want, we can do this on the regular.
Yeah, we're gonna also put you with all the entire Discord as well. So
Cool.
it's gonna be good. All right.
Cool. Well, I appreciate y'all. Again, y'all have my Insta, Getting Into Fit. Follow me. Send me. If y'all have questions between here and the next session, ask me questions anytime. I really don't mind. I promise you, as soon as I see it, I'll answer. If I don't see it, I don't get to, as soon as I get to it, I'll definitely answer your questions. I'm here to help. We're in this together. So.
Thank you.